Hello. Indian government bond yields continued to trend higher in February. This is the 7th consecutive month of hardening in bond yields since July 2017. The benchmark government 10-year bond yields hardened by around 30 basis points to close the month at around 7.73%. It touched a peak level of 7.816 on Feb 22nd. The benchmark 10-year government bond yields have hardened by around 40 basis points on year-to-date basis. Yields of Indian corporate bonds have also moved in tandem with the government bond yields in February. Yields of liquid 3-year AAA PSU bonds have increased by around 27 basis points to around 7.91%, while the 5-year AAA PSU bond yields have hardened by around 28 basis points to 8.02% on Feb 28 according to Bloomberg data. This across-the-board hardening of bond yields have resulted in a sharp fall in bond prices and a significant decline in trading activities as market participants attempt to curtail their losses. On the economic front, it was a mixed bag month. While the banking system liquidity surplus had declined in February, January consumer price inflation was marginally lower at 5.07% year over year. However, the trade deficit for the month of January widened significantly to around $16.3 billion against the expectations of around $13 billion. Market participants are clearly observing the trajectory of critical economic parameters such as headline inflation, current account deficit, GST collections, as well as rupee-dollar exchange rate in order to gauge the health of our economy, as macroeconomic data has started to turn a bit hazy at the margin. So what does all this mean for the bond market? Clearly, the latest increase in the volatility in the bond market has caught market participants off guard and are asking for the direction in terms of their existing investments in the fixed income. Based on our assessment of critical macroeconomic parameters, we believe that investors are better off remaining invested in 1 to 3 year segment of high quality liquid assets. We advise investors to remain relatively underweight on duration funds and focus more on liquid funds, arbitrage funds, ultra short-term funds and such like that till the present level of volatility subsides and buyers emerge in the bond market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.